Hey gang, Dennis Tubbergen here. It is Monday, March the 19th, 2018. Sneaking up here on the first day of spring. I have another video market update for you today. As you can see on the screen, it is about 1:30 or so Monday. And we see that the Dow Jones Industrial Average has fallen a bit. And you can see that that has been the trend really since the high back on January 26th. There is an old saying that commodities are often the canary in the coal mine when it comes to what stock prices are going to do in the future. So I thought today we might look at some commodities, in particular agricultural commodities. Now, since agricultural commodities are priced in US dollars and the Dow is priced in US dollars, typically a stronger dollar would mean that commodity prices would fall. And obviously, the converse is also true. A weaker dollar would see stronger commodity prices. Excuse me. Since about a year ago, this chart goes back to just into April. This is a chart of the U.S. dollar. It has been falling on a daily basis, although here, since about mid-January or so, it hasn't moved. It's been pretty much in a trading range. So now if we go take a look at what commodities have done, in particular agricultural commodities, this is a chart of an exchange-traded fund that tracks the price of corn. Notice that over the last 4 trading days, corn has fallen. In fact, today, really falling. In fact, this has dropped almost 10% in the last 4 trading days. And that's after quite a nice rally in corn. If I can get the chart here, you can see that corn really over the last bit has declined significantly. Got very, very low. Prices were down around $3.50 a bushel. Cash prices now have fallen back to about $3.70 or so a bushel today. If you take a look at wheat, another agricultural commodity, this has been falling significantly during the month of March after a run-up. And if you take a look at soybeans, very similar chart, has fallen as well. So given that commodities are falling, that typically weighs on stocks. To go back to the Dow chart here, we also felt that given that we saw the high here in end of January, that the most likely downside, the most likely direction here for stocks would be down. We did get a rally back to about a Fibonacci 78.6% turning point, and now stocks have continued to decline. So given where commodities are, given how stock charts look, and given that historically speaking, oftentimes commodity prices fall before stocks, we would certainly be cautious here holding both commodities and stocks. That's today's market update.